Okay, hello folks. Welcome to Market Trends. I'm David Russell, Global Head of Market Strategy at TradeStation Group. It's great to be with everyone. I want to just show you a few disclosures to begin. And as usual, if you go to tradestation.com and you go to the Insights button, on the top you will see our blog, and that will take you to the blog post about today's today's talking points and the items we're going to be talking about. Here are the standardized returns of some ETFs that we may be discussing. Now, I updated the zip file, so you might want to do that. If you go here, I'll just show you tradestation.com, go to Insights, and then the articles at the top. Now, this article has a new zip file at the top. It also has a link to the Crossroads Summit. Let me tell you about that. Basically, the Crossroads Summit is in Miami the week before Thanksgiving, and I'm going to be there along with lots of other people. This is being sponsored by TradeStation, and crossroadssummit.com is the website. There are going to be some really interesting speakers talking about changing trends in the world of business and economics, and I will be interviewing some of them. So hopefully you can make it November 21st and 22nd in Miami, crossroadssummit.com. There's a link right here. And also we have a new zip file right here for your use. So I wanted to actually start off, I haven't done this in a while, to make sure, we have some new people watching, to make sure you understand how the zip file actually works. So right now, let me actually just go into my market. I'm going to go in here, and I actually have, sorry about this. Actually, now I'm all messed up with my, sorry folks. I went to the wrong zip file. And all right, so if you go into the zip file, the zip file today is called MT Public Materials October 2027. And in here, you'll see this folder called MT Public Materials. And when you go into it, you will see a whole bunch of these different files. Now, the ones that have the little kind of green and gray, these are ELD files. Now, I've added some new ones that you might want to see. In particular, I added this one called 2MA Cross LE, and I'll get to that in a second. I talked about it last week, is one I mentioned, and also the high-low ranges ELD. So I have some other workspaces in here as well. I just kind of data them based on the actual webinar, so I'm going to kind of go through and talk about some of those very quickly. So what you do, if you want to actually use one of these, if you double click, for example, on this, it will bring up a dialog box like this, and you go to this, and you'll actually see this thing, and you import it. I already have it, so I'm not going to import it, but basically it will bring it into your TradeStation platform. Once you have it in your TradeStation platform, then you can actually go to the blue file, which is a workspace, which is this. We have these different workspaces here that we're going to talk about, and we'll just kind of explain that's how it works. So you want to, first of all, start off with the ELD file and make sure you have the actual indicators loaded into your TradeStation platform before you try and use the actual workspace. Now, I want to mention, because a few things interestingly popped up recently, so I'm going to look at some of these. First, last week we talked about this indicator, and what it says is, it says when the NASDAQ 100 is above its 200-day moving average and the 20-day MA crosses above the 50-day MA to buy. And then basically it's programmed as an automated strategy. And we looked at this and we found that it actually identified some opportunities. Wanted to just kind of show this. The key thing with this is that you want to be in a it should work in a situation when the moving average, when you're above the 200-day. When you go under the 200-day, it will enter at bad times like this. This is kind of a real simple idea of using the long-term trend to determine your direction and using a shorter-term signal to actually trigger an entry. So I want to just mention that there's obviously a lot of different ways you can do that. The thing is that what is special about this strategy, it's not an indicator, it's a strategy, because it can automatically place buy and sell orders, is that this strategy adds the condition that the indicator has to be above the 200-day moving average. So if we go here to edit our strategies and you look at it, this the one that I created is this one right here, which is called, um, I took the existing one, moving average two line cross, long entry, and then I added a little bit of code to it. And what this says is, if I actually go into my settings for it, the the long trend price moving average, it has to be above the 200-day for it to signal a buy. And then the fast length and the short length and the 20 cross above the 50. Now you can adjust these. You can also optimize them. If you go down here and you click on optimize, you change how many intervals you want to do it, for each of these. So you can say, I want to start at 100 MA, go up to 300 MA, and I want to jump in increments of 20. You can jump in increments of one. We're not going to do that because it really slows down your computer to have it running, but you can optimize. I have not optimized this. I want to do it just kind of simple, but I wanted to show how easy it is when you use easy language. A little, if you want to go to TradeStation, learn on our website, go to some of Jesus Nava's webinars. He'll show you some of the ways you can customize things with easy language. I basically added a tiny bit of code to an existing indicator, was not difficult at all. And even now, I'll just mention with things like ChatGPT and other kinds of AI, it's possible to get help coding. You don't have to be a computer scientist to do the coding. It's pretty interesting. So it's interesting. You'll often look at strategies. You say, well, this works like this, but not like that. Well, you can add conditions, which is what I did here. So I want to just very quickly mention that. The next thing I wanted to show you was this workspace shows the S&P 500 with weekly bars. Now, what this in the bottom is, this is the highest price versus the lowest price in sheer points. So this is going to show how big the bar is in points. Now, of course, as the index moves higher, points are less, individual points mean less. So the lower one shows it as a percentage, the high divided by the low, each candle. So what's interesting to me is that this candle last week, the week at the end of September, was the smallest range since back here at the end of March, which was also a top. So one thing I've just, seen that caused me a little bit, I've seen a few things here now that to me that are slightly not as positive. In many ways, they are more kind of consistent with the market, maybe just kind of sitting with some potential for some short-term pullbacks. And one of the things we're going to be talking about today are the geopolitical things, which interestingly correspond to this kind of period of a kind of indecision. But one thing that is a potential reversal signal is when you see a tight weekly range like this. It can mark, any kind of tight period like this after a run when it's near a high. It can often suggest actually that it's just kind of a waning of enthusiasm and just kind of a reversal. It has happened at different times. So I wanted to mention that because it's interesting to see that we have that smaller range. It's also that was also the end more or less of a quarter. So you have some things like that kind of sitting in there. Now, if we look at the daily chart here, what's interesting to me, and I'm noticing this as time kind of goes on, is that stochastics turning down. It's not always the most reliable. I mean, back here it was not a good signal, but there are times when stochastic turns down from an overbought condition that is not bullish, and it can be sometimes. It's one of those things. It's like maybe it's right sometimes, but when it's right, it can give an interesting potential signal. So seeing stochastics dip down like this is potentially a little bit of a sign of reversal. Another thing is here, if you look, we had an inside day on the 27th, and then we ended, and then we had an outside day on Monday, the beginning of the week. The thing about this is that even though it's a bullish day, outside days are reversal patterns. In my honest opinion, when I look at outside days, and I've looked at these a lot, I don't believe that their actual direction matters as reversal signals. What I mean is, if you're at the extreme of a range and you see an outside day, it's often a reversal signal. So you can be at the bottom of a range, have a bearish outside day, and then before you know it, it's bullish. So I want to just kind of mention that, is that seeing a bullish outside day kind of at a high, we're drifting up here, is to me something of a potentially slightly bearish situation. Now, let me be very clear. Candlesticks themselves, not overly important, in terms of individual this day, that day. I mean, the trends will matter, but I want to just point out there are some things here that are giving some potential signs of weakness. We're under the 8-day exponential, which is starting to fall. So those things overall are a little bit of kind of a negative thing. Again, though, we're in a month that is historically it's very tricky before an election. October's have been difficult before elections, and I'm gonna mention it, but there's obviously a lot of things now that are causing a little more anxiety. So I want to mention the fact that when you kind of see where we are still near highs with some potential signs of weakness and reversals, it does, I think, when you look at the uncertainties facing us, it might be a situation here where if we were facing the geopolitical uncertainties that we're facing and the S&P was down here, then it would be a different matter. But to me, it's one of those things where everything is relative. So if you're at a spot where you've had a run and you're near and you're kind of stalling near a high, then people can be more sensitive to something being bad. When you're at a low, people will be more forgiving because selling has already happened. So at this point, we're in a spot where no selling has really happened yet, and that does create some potential risk for now some selling. So I'm watching basically this July high back here as more or less kind of being the level that people might want to see us stay above. There are some other kind of levels here. There was a weekly low back here that we're kind of crumbling under. If you look at this on a weekly chart back here on this weekly chart also, I mean, this kind of pattern when you kind of have this, seeing these tight candles near highs followed by lower highs is not really a terrific sign. So, this sort of thing is, like this one right here. We go up, it's a tight, small candle, and then we violate its low, we sit, and then we accelerate down. So now we have a tight, high candle, but it's very tight, and now we've already violated its low. So, that's kind of you can see other times when there's like tight high candles, but then like some of these, but then what do you get? You get follow through. So I want to just point out that in this case, it's a spot where you could look back and say like that we saw these potential signs. I don't want to express much of a bearish view because we've talked a lot about the positive things that are out there, and I think they remain in effect. Today, for example, Jensen Huang at NVIDIA said he's seeing insane demand for Blackwell chips. That was an interesting note that comes up. And then when you look at some of the other news out there today, ISM services was better than expected. There have been a lot of things on the inflation front, in my opinion, that are very positive. The Institute for Supply Management's manufacturing report had a very good inflation reading. There have also been other things when you look at rents and some of the shelter costs as the potential. This week, oil inventories were higher than expected. Now, obviously, oil fits into that whole conversation about geopolitical risk. However, at the same time, we do have to recognize the fact here that we've seen some real structural bearishness in oil, which over time, when you look at how it has worked in the past, it could result in oil going significantly lower once we get past the geopolitical risk. And I think those are real sort of things that we remember. So I want to just point out that we have these kind of things out there you can look at that are positive, but then we have these big uncertainties coming up, and here we are just kind of sitting at high. So it puts us in a situation where it's not really as much of an environment now that is quite as favorable for even looking for individual stocks so much. We're setting up for a spot here. We're focusing on the indexes might be more of a sort of thing, and just kind of waiting and recognizing that if the market pulls back 5 or 6% or something, if we go down and test some recent lows, then people might be more willing to say, I'm not as, then it's like, well, now you're going to pay me to take risk. Right now, you're not really getting paid to take risk. If the market pulls back here, people will be more comfortable taking risk, seeing some of the negativity work out. For me, it's all about knowing that there's space to go from point A to point B. And the question is, has the push happened yet? So right now, when you look at this chart, we could potentially say there's space to move to the downside. Has the push happened yet? No. So it's kind of one of these things where if we get a hot employment report tomorrow morning, that might freak people out. If the situation in the Middle East, something happens, that's something people are also waiting on. And then after, the other problem with that is once it happens, then you're going to be waiting on what happens after that. What does it mean, and everything else. So I think right here, those are the main points I want to kind of make about that. But I think that when we look at the economic things, it's funny, the Challenger grade job cuts today were, up slightly, but they're not doing that bad. We've seen the economic data is not that bad. Initial jobless claims have come down significantly. So I think right now we're at a spot. It's interesting. The guy from Challenger Gray actually said the economy is at a kind of inflection point, and I think that the market's at an inflection point too. In many ways, we have been whistling past the graveyard on things like geopolitical risk, very negative sentiment because there's been cash on the sidelines, and often climbing a wall of worry is very much the thing that people which the market has a tendency to do. However, we are kind of at this point here where you could say we are, it could be the same thing with a geopolitical thing or anything else. I do feel that technically the market, technically the chart is telling us what we kind of also see where the employment situation, might actually get better and we are in a very strong place, or we could be at the beginning of, seeing ongoing kind of weakness, and the hiring was weak in the ISM services and manufacturing today. So earlier in the week, so we could be at a spot when we do start to see the labor market weaken significantly, or we could be at that perfect kind of cooling before we have a Goldilocks expansion. Um, and so that's just kind of why I think the market is sitting where it is. Now, I wanted to very quickly actually just highlight these situations. I want to mention that it's interesting that if you look at the big move in the last few weeks has been this rally in Chinese stocks. I want to mention that that is actually an interesting thing that we're seeing, because where did the move come from? It didn't come from a strong GDP report. It didn't come from strong earnings. It came from a few politicians, or some politicians and public officials, making a decision that then triggered hundreds of billions of dollars of asset appreciation. That is political risk. It might not be bearish risk, but it's risk. And it shows that the catalyst now is no longer coming from fundamentals, it's coming from politics. Next, we have the situation in the Middle East, which is, very strange when you really look at it, because we don't really know. I mean, at this point, there's the idea that if Israel was to hit the oil, operations of Iran in the Persian Gulf, well, does it get confined to Iran, because it's pretty close to where the Saudis and everyone else have their oil? If there's anything really getting ugly in the Persian Gulf, the whole Gulf in many ways, the oil operations. I mean, are people going to be operating massive oil tankers and all this stuff when there's missiles flying around and stuff like that? So you get to the spot when even if the Saudis are not, directly in any way attacked, the area that their oil has to go through can be affected. And that's a big thing. And the other thing I think is interesting overall is that I was actually in the in Operation Iraqi Freedom with the Marine Corps, and we just rolled in across the desert. It's like flat when you come in from Saudi Arabia to Iraq. This is very different because Iran is actually a completely different kind of land geographically. So it's not really comparable to things that we've seen in the past. I want to just mention that when we fought against Iraq, we had an ally right next to it, and it was basically driving across a flat desert. And this is now actually something that's up in a mountainous country far away from anything. So it's a different sort of scenario, and you can kind of look at it and say, wow, it could be really bad. And the other thing is, if something were to happen and Israel were to hit them, then it's like the question becomes, well, then what happens after that? And then what happens after that? And it creates a very sort of an environment where normal things that we look at, like economic reports, earnings, and these sort of things, are all kind of out the window. And so I think it's one of these questions where people might want to be thinking about futures. They might want to be kind of watching different things to monitor what might happen, because the big events might happen outside of normal American business, or normal trading hours for stocks and things. It's just the sort of nature of this situation. Then you have the dock worker strike, which at this point, not a big deal. In 2 to 3 weeks, it becomes a big deal. So, when you think about it, in some ways, I'm not enough of an economist to say exactly, but the fact is that in some ways it could be worse than COVID, because you will have the demand of the economy without the supply. So you could see some real inflationary things result from this. I mean, it could result in some real weird issues where suddenly, the economy will keep going, right? So you're going to have people still shopping and buying things at the same time. Certain items are going to disappear. So that's really creates some uncertainty. It creates uncertainty for corporate earnings. It creates uncertainty for confidence. It creates all sorts of sort of issues. And at this point, there's really no clear path toward a resolution to it. So again, it's one of those things where for several days it doesn't matter, but as it starts dragging on, These are also things out there that no one really knows. Then the other thing is the situation in Eastern Europe, because the Ukrainians aren't doing terribly well, it seems, when you look at it. And at a certain point in time, this could pop up. So why am I? Yeah, I don't like to talk about geopolitics. My point is, we're in a new month. We have the election coming up, which also, with the polls tight and everything else, people can start to worry about when will we know the winner and all that sort of stuff. So, the thing about something like geopolitics is it doesn't matter until it does. And I think the way the market often is when you look at these sort of events is that the market will start to pay attention to it all at once. And now we're in October. We're in a new quarter. We're in October. The election is, I guess, what is it, the 5th or something of November? So, I mean, we're talking now, we're getting close. We have all these other issues, and the S&P sitting at the high, sitting under the 8-day exponential moving average with stochastic turning down and some potential reversal signals. So you just kind of put it all together. And, I don't ever want to be trying to make any predictions about anything geopolitical, but I do recognize the risks that are out there, and I want to emphasize that. And to me, the biggest challenge about this is that we don't know we don't know what we're looking for, but we'll know what it is when it happens. So it could just be a hot jobs report tomorrow and the market, and then other things happen. It could be a certain thing that happens over the weekend. Who knows when the situation could happen in the Middle East? So all these things are, to me, we know when payrolls are, we know when companies report earnings, but we don't know when this sort of stuff is going to exactly happen. With the dock worker strike, you just don't know how it's going to play out, and you don't know what actually matters. Is it going to be, this union guy meeting with this government official? You don't know. So I want to just kind of mention that, because I have a blog post coming out that kind of mentions how futures are really useful in certain situations, and this potentially is one of them. So people might want to be kind of thinking about just kind of focusing on the futures, looking at things like potentially crude oil, S&P 500 futures, bond futures, gold futures, things like that. Those are the areas where people might actually kind of see the movement happening. And the thing is that they trade at night as well. So, situations in the Middle East can happen. I think it's 7 or 8 hours ahead of New York. So, I mean, these things can be happening overnight. And so trying to think about using futures some might be useful. Now, some of the other things I want to quickly mention. Let me look at some of these other workspaces, because there were things I wanted to share. I showed this. All right, all right. Now these are actually, I wanted to show this. This is really the last couple of things here. Actually, before I do that, let me show you guys. Remember, earnings season starts next week. Don't forget. So if you go to MT Main, I named this one October 2024. I removed a lot of older files from the zip file as well. So hopefully you guys appreciate that. If you want any of the older files, go back to the older blog posts. Those old zip files are still available. Now, if you go to MT Main and you go to earnings dates, the tab on there, you can then go to, I'm going to go to data, add symbol list, NASDAQ 100. I want to remind people, if you don't remember, the earnings season is coming up, and this is the way that you can actually see those companies if you're interested. You can plan for earnings season this way. And I just brought in the NASDAQ 100. It's bringing in the dates. I can come back to it, but I want to remind you guys that we have this built in as a tab on our main workspace if you want to see it. Now, these are two others. These are workspace I actually created about a year ago when the market was crashing. And I want to kind of share them with you guys again to kind of see. These are two variations of the same thing. The first one was from October of last year, and I'm resharing it with you guys. Excuse me. And what's interesting about this is something like the Qs with 5-minute candles. And I have this set up to show when a low of the week occurs, it will show this like gold circle. And then the high of the session will show this cross. So it's interesting just to kind of know where you are in the week. That's not as important as the main thing on this, which I have found when doing short-term trading, is the RSI. Wilder's RSI in the 5-minute chart can be highly useful. Basically, to think about, wanting to be more of a buyer when it's over, when it's on the oversold side, and more of a seller on the overbought side. When it gets up higher, you can also see that this is, in my view, a pretty useful sort of tool. And like I've said, for me, Wilder's RSI is very good as an oscillator, overbought, oversold on the intraday chart, the short term, kind of 5 or 15 minute chart, or the hourly chart. Sometimes, if you look at on a longer term, it can also be useful. But this is for people looking to take positions over a period of an hour or two. You know, something like that. It's interesting yesterday when we kind of gapped down, but then see we hit that overbought and we came ripping back. The nice thing about this is you can also see that it hit this low. Actually, wait a second. Why? Let me actually wait. Let me see what this is. Maybe I have this wrong. All right, it's the low of the day. I'm sorry. So the thing I like about this is that, like, so yesterday morning you would have basically seen. I have a different chart that does it as a low of the week. So basically, yesterday morning, as an example of how this can work, it would have knifed down and it would have basically hit an oversold level, and you would have seen how it compared to the low earlier. You would have seen, all right, here we are right near this low from the previous day on the first, where it oversold, and then you could see it maybe holding. And then the thing I often do also is I'll just hit like the one button and flick over to see, okay, because if you actually look, this occurred over a period of a few minutes. And this is for very short-term trading, but I want to just kind of show you this. Actually, I'm sorry, right here. It's hard to even zoom in. The key thing is it using Wilder's RSI? Actually, that can happen really quick. I was not trading Qs yesterday. I was trading a different index. The key thing is that this kind of shows you, it allows you to see the level, and it allows you to see the condition of being overbought and oversold. And that's really the interesting thing about this pattern. Now, the other chart I have is more kind of complicated, but what this does is this allows us to see, this is something that you might want to experiment with. And what this is that this puts MACD on the upper chart. So this is actually the signal line of MACD, and this is the actual, what do you call it? The the histogram. And I did is I plotted them to the left axis. So what this tells you is, remember, on MACD, if we go over here to and I set up the time with much longer time frames to match the daily patterns. So if you look at something like IWM, the Russell, which I would mention that the Russell here actually, its failure to break out, this, people might see some space to the downside in this. We've been mentioning this, and it's kind of, the whole bounce and everything in this has been, it looks like it's setting up for another just classic sort of rug pull, Lucy in the football sort of thing. Anyway, you'll know I don't have, let me just go ahead and add MACD to this, and you can see. You can see MACD having crossed down on the daily. So what this chart does is, this is set up to actually mimic it. And what I did was I gave it a much longer time frame. You can see the numbers here are designed for 5-minute intervals. I multiplied how many 5-minute candles would occur in the number of days that typically, so that the number over on the daily, you can see that MACD has the settings of 12, 26, 9. So what I did was I then figured out how many 5-minute candles occurred in any day, and whatever it is, I don't know, it's like 100 or something. I then basically multiplied it by that number. So what it does is, on the daily, on the 5-minute chart, it will show you what daily MACD is doing. Okay, and so basically you can see here that as this turned red, this thing started falling. So this actually shows the way that MACD turned lower. Anyway, this kind of also tells you that it kind of gives you some direction to kind of say, all right, this thing has more of a downtrend. When it goes up toward overbought conditions, that might be something that is getting potentially more interesting. So it's interesting today when you actually look at how it went up to that level, that actually, if you look at it on like a 1-minute chart, I mean, you can see it actually went up to overbought here on the short term and gave a really clear signal. I'm just looking at these because it's not always just 5 minutes or whatever. The thing I want to show about this is it's possible to get a good sense of kind of short-term direction and then go even more granular with the intraday charting with RSI, looking for the overbought, oversold levels. And I wanted to show you this because it's more of just an illustration. I found this to be kind of interesting because it kind of helps me stay focused to saying like, all right, this is something where maybe more you want to be leaning on the bear side because the MACD is falling and you see it hit the high of the day, near overbought, start coming down. It can help highlight the direction that we want to be focusing on. All right. Finally, I'll just remind you folks that we have payrolls in the morning, and then we have the robo-taxi event from Tesla next week. Overall, like I said, though, my view here, we're in a spot where the overall situation has much more of a focus, likely, kind of on geopolitics for now, and to a certain extent, with still some time before the big earnings coming and other things like that, and the month of October and everything else. Um, the potential kind of sense of dread and geopolitical anxiety might actually increase from here. So it's just kind of the way things might kind of shake up. And if that is the case, the thing to remember is that sometimes something like futures might actually help you, you know, have a little bit more, clarity on things than something like looking for individual stocks. And so one just mentioned there's many tools, and there's one more tool, just think about having in your toolbox. Hope everyone has a great week. We will see you on State of the Market on Monday. Take care. Thank you much.